Most of the data today coming in on the upside and really worked against those fears of a recession that are out there. ADP up 195, more than expected and greater than the expectation for jobs. Jobless claims 217, up a bit, but still in a range that says the job market is healthy. Q2 productivity, second month in a row of above average productivity, though did slow from the first quarter. July factory orders above expectations, contradicting the ISM manufacturing. And there's that services number, which is a big chunk of the economy, maybe the biggest chunk of the economy, 56.4, better than expected. Let's talk about a tale of two economies. I have here the ISM manufacturing, whose dip below 50 caused something like a 400-point decline earlier this week, against the ISM services. Let me tell you, this gap between the two is the 13th largest that I could find, going back to 1997, which is 266 months. Please write that down and pencil it home. Manufacturing, of course, is going to be more affected by tariffs, by global economic weakness, and the strong dollar than services will be. Two other times we've had a wide gap like this. Another big gap came ahead of the recession in 2000. In 2015, it was just a growth slowdown led by manufacturing. So the outlook for Fed rate cuts did react to the better data by reducing probabilities, not of a rate cut in September, but take a look at this chart. October fell to 57%. Melissa just got a chill. Was that because of the data?
I was still pondering the,
I thought you were
13
scared
times of the gap.
The 13th gap. Well, you keep pondering that, because we'll be done in a minute here. 71% chance earlier this morning of a rate cut in October. That's fallen to 57. And they were right around the 50 percentile end for a rate cut in December. That's now just 37%. So baking out some of the cuts here. And the outlook for the Fed is going to react again tomorrow at 8:30. Expectations are for job growth of 150,000. A hotter number, if it follows ADP, could further dial back expectations for the rate cut. And that's not it, because markets get a chance to react again when Fed Chairman Jay Powell speaks in Switzerland at 12:30 p.m. Eastern Time.
So in terms of that gap between services and manufacturing, you said that you found 13 times where that gap was larger.
Yeah.
But only 2 of those times led to a recession
One episode of the gap widening.
And one growth slowdown.
Yeah, that's right.
So 2 out of the 13 was some sort of indicator.
The 13,
there are more times.
No, the 13 are sort of bulked together. There were 4 or 5 big numbers together and 4 or 5 when the gap opened up, essentially. And you can see it opening up there. There were like 10, 11, 12, a bunch of them together that came before 2000. It was a good recession indicator then. It was not in 2015. Right. Could have been an oil-related thing in 15 and 16 when oil prices fell. We may have a piece of that in here. There's a lot going on for manufacturing. It's not affecting the services sector all that badly. Some of the stuff inside the services number, not that great today, but 56 is a good and solid number.